Welcome to our video on the benefits of investing in dividend stocks. In this video, we will discuss what dividend stocks are, how they work, and why they can be a great investment option for many investors. Dividend stocks are a type of stock that pays a portion of the company's profits to its shareholders. These payments are called dividends, and they are usually paid out quarterly or annually. Dividend stocks are often associated with stable, established companies that have a long history of paying dividends. So, why should you consider investing in dividend stocks? There are several benefits to investing in these types of stocks, which we will explore in more detail in the following segments. One of the primary benefits of investing in dividend stocks is the steady income they can provide. Unlike growth stocks, which reinvest their profits back into the company, dividend stocks pay out a portion of their profits to shareholders in the form of dividends. This means that if you invest in dividend stocks, you can expect to receive regular payments from the company. These payments can provide a steady stream of income, which can be especially beneficial for retirees or those who are looking for a reliable source of passive income. Another benefit of investing in dividend stocks is that they tend to be less risky than other types of stocks. Because dividend stocks are often associated with stable, established companies, they are generally less volatile than growth stocks or other high-risk investments. In addition, because dividend stocks pay out regular dividends, they can provide a cushion against market downturns. Even if the stock price drops, you can still receive regular payments from the company, which can help offset any losses. While dividend stocks may not offer the same potential for short-term gains as growth stocks, they can provide long-term growth potential. Because dividend stocks are often associated with stable, established companies, they can be a good choice for investors who are looking for a long-term investment strategy. Over time, these companies may increase their dividend payments, which can provide a growing stream of income for investors. In addition, as the company grows and becomes more profitable, the stock price may also increase, providing capital gains for investors. Finally, investing in dividend stocks can provide tax benefits for investors. In many cases, dividends are taxed at a lower rate than other types of investment income, such as capital gains. In addition, some dividend stocks may qualify for the qualified dividend tax rate, which is even lower than the standard dividend tax rate. This can provide significant tax savings for investors, especially those who are in higher tax brackets. Overall, investing in dividend stocks can provide a range of benefits for investors, including steady income, lower risk, long-term growth potential, and tax benefits. If you are looking for a reliable, long-term investment strategy, dividend stocks may be a good choice for you. Now that we've discussed the benefits of investing in dividend stocks, let's take a closer look at how they work. As we mentioned earlier, dividend stocks are a type of stock that pays a portion of the company's profits to its shareholders. These payments are called dividends, and they are usually paid out quarterly or annually. The amount of the dividend payment is determined by the company's board of directors, and it can vary from year to year. In general, companies that are more profitable and have a long history of paying dividends are more likely to continue paying dividends in the future. When you invest in dividend stocks, you will receive a portion of the company's profits in the form of dividends. These payments can provide a steady stream of income, which can be especially beneficial for retirees or those who are looking for a reliable source of passive income. It's important to note that not all stocks pay dividends. Growth stocks, for example, typically reinvest their profits back into the company rather than paying out dividends to shareholders. In addition, not all dividend stocks are created equal. Some companies may pay higher dividends than others, while others may have a more consistent track record of paying dividends over time. When selecting dividend stocks to invest in, it's important to do your research and choose companies that have a strong financial position and a history of paying dividends. This can help ensure that you receive a steady stream of income and that your investment is protected over the long term. In the next segment, we will discuss the risks associated with investing in dividend stocks and how to mitigate those risks. While investing in dividend stocks can provide a range of benefits, it's important to be aware of the risks associated with this type of investment. One of the main risks of investing in dividend stocks is that the company may reduce or suspend its dividend payments. This can happen if the company experiences financial difficulties or if it decides to reinvest its profits back into the business rather than paying out dividends to shareholders. In addition, dividend stocks can still be subject to market volatility and fluctuations in the stock price. While dividend stocks are generally less risky than growth stocks, they are not immune to market downturns. To mitigate these risks, there are several strategies that investors can use when investing in dividend stocks. One strategy is to diversify your portfolio by investing in a variety of dividend stocks across different industries and sectors. This can help spread out your risk and ensure that you are not overly exposed to any one company or sector. In addition, diversification can help ensure that you receive a steady stream of income even if one of your dividend stocks reduces or suspends its dividend payments. Another strategy is to focus on companies that have a long history of paying dividends and a strong financial position. These companies are more likely to continue paying dividends in the future and are less likely to experience financial difficulties that could lead to a reduction or suspension of dividend payments. Finally, it's important to monitor your dividend stocks regularly and stay up to date on any news or developments that could impact the company's financial position or dividend payments. By following these strategies, investors can mitigate the risks associated with investing in dividend stocks and ensure that they receive a steady stream of income over the long term. In the next segment, we will discuss how to select dividend stocks that are right for your investment goals and risk tolerance. When selecting dividend stocks to invest in, it's important to consider your investment goals and risk tolerance. If you are looking for a steady stream of income, you may want to focus on companies that have a high dividend yield. The dividend yield is the annual dividend payment divided by the stock price, expressed as a percentage. Companies with a high dividend yield may be more attractive to income-oriented investors, but it's important to remember that a high dividend yield can also indicate that the company's stock price has fallen. If you are looking for long-term growth potential, you may want to focus on companies that have a history of increasing their dividend payments over time. These companies may not have the highest dividend yield, but they may provide more long-term growth potential. In addition, it's important to consider the company's financial position and its ability to continue paying dividends in the future. Look for companies with a strong balance sheet, a history of profitability, and a solid dividend payout ratio. The dividend payout ratio is the percentage of the company's earnings that are paid out as dividends. A high dividend payout ratio may indicate that the company is paying out more in dividends than it can afford, which could be a red flag for investors. Finally, it's important to consider the company's industry and sector. Some industries, such as utilities and consumer staples, are known for their stable, reliable dividend payments. Other industries, such as technology and healthcare, may offer more growth potential, but may be less reliable when it comes to dividend payments. By considering these factors and doing your research, you can select dividend stocks that are right for your investment goals and risk tolerance. In the final segment, we will summarize the benefits of investing in dividend stocks and provide some tips for getting started. In this video, we've discussed the benefits of investing in dividend stocks, including steady income, low risk, long-term growth potential, and tax benefits. We've also discussed how dividend stocks work, the risks associated with investing in dividend stocks, and how to select dividend stocks that are right for your investment goals and risk tolerance. If you're interested in investing in dividend stocks, here are some tips for getting started. 1. Do your research. Before investing in any dividend stock, it's important to do your research and understand the company's financial position, dividend history, and industry trends. 2. Diversify your portfolio. To mitigate risk, consider investing in a variety of dividend stocks across different industries and sectors. 3. Monitor your investments. Regularly monitor your dividend stocks and stay up to date on any news or developments that could impact the company's financial position or dividend payments. 4. Consider working with a financial advisor. A financial advisor can help you select dividend stocks that are right for your investment goals and risk tolerance, and can provide guidance on how to manage your portfolio over time. By following these tips and investing in dividend stocks that are right for your investment goals and risk tolerance, you can potentially benefit from steady income, low risk, long-term growth potential, and tax benefits. Thank you for watching this video on the benefits of investing in dividend stocks. We hope you found this information helpful in making informed investment decisions.